Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Monday. In today's program, I want to discuss, sort of follow on a little bit what we discussed last week in reference to Twitter and how it's spreading amongst a number of large technical companies. In particular today, Facebook. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, indeed, there may be trouble ahead for Facebook, because in the Wall Street Journal, it's been reported that Meta platforms, Facebook, are planning a large-scale layoffs this week, as soon as, in fact, as Wednesday. Now, Meta currently employs 87,000 employees. 87,000 employees. And these layoffs are expected to affect thousands of individuals. Now, it's not supposed to be as dramatic as Twitter, which laid off 50% of its workforce, but this is the first reduction in headcount for the company's 18-year history. And as well as that, it is expected to be the largest cut in jobs for a major technology company so far this year. A major cut. So maybe not as dramatic as 50%, but still a large number. We should find out more about this on Wednesday. Now, Meta share price is actually down this year by 73%, and their cash flow has declined by 98%. And 15 billion of this is mainly down to the cost of 15 billion on the metaverse, which is proving to be an absolute nightmare. An absolute nightmare. In fact, like I say, for the actual Horizon or the metaverse they've only got 200,000 subscribers. So it's not doing very well at all. So like I say, this is going to be expected to be announced on Wednesday. Maybe not as dramatic as Twitter, but still a very large number of people are expected to be affected by these layoffs. Twitter nightmare. As we know, we spoke about this last week. Friday was the day. They culled about almost 50% of their 7,500 strong workforce. Okay, so it's a large cut. And the funny thing about this is they're actually asking a couple employees back because they think they've made a mistake. So it's a complete nightmare, absolute chaotic over there at the moment. In fact, Twitter is reported to be losing around $4 million per day. So this is half the reason why they had to do the cull. My nan uses Facebook. It says it all. Yeah, okay, fair enough. Oh, hello, John. Good question. When's your expectation for the US midterms? I'm going to get to that. Actually, it's a really good question. Thank you, John. A really good question. What was I going to say? So, yeah, like I say, they're actually asking people to come back. Because, like I say, they've made a bit of a mistake, but they're actually losing more than $4 million per day at the moment currently. And to try and bring some money in, don't forget, I talked about this last week as well. They've actually confirmed how much they're going to charge for their little blue tick, the verification on their accounts. It's going to be $7.99 per month. Don't forget, I mentioned last week, there was talks of it being like $20. And there was that conversation between, obviously, Musk and Stephen King, the famous writer. And Stephen King, in very colorful words, said he's not going to be paying that amount. And then obviously Musk replied, we got to pay the bill somehow. And this is how they're going to pay some of the bills. So, yeah, that's all very good. There you go. Would you go back? Would I go back? Go back where? Sorry. Oh, thank you, Stephen King, for bringing it down. Yes, indeed. Indeed. So anyway, yeah. So obviously, so Facebook on Wednesday, Twitter's nightmare, but there's something else really big this week. And it's happening. Two major things, actually, which is going to be dictating the mind of the market, and that is obviously the US CPI and the US midterms, like John kindly already asked, which will dominate the mind of the market. Starting with the US CPI, which is obviously going to be huge, huge. Expectation year on year is it for it to come in at 8%. The previous reading was 8.2%, so slightly lower, but still way above the Fed target of 2%. But most worrying at all, and this is what I'm going to be really focused on myself, is we've got the core coming out as well, core CPI. And don't forget, that doesn't include energies. That's expectations to come at 6.5%. Previous reading was 6.6. 6.5 is not a lot of difference from the 6.6. If I was asked to go back to Twitter, oh, right, good question. You started saying if I was fired by Twitter and will I go back? I don't know. It depends. We all have bills, don't we? So I guess I probably would do. But again, that's a very uncertain environment at the moment in Twitter. Very uncertain. Sticking with the core, though, because like I say, this is major. This is going to be major. This is going to be happening on Thursday. Okay. I will be doing a watch along on this event because it's going to be a really big event. But like I say, if it comes in at 6.5, it really shows that the Fed is struggling to get on top of inflation. And that would really mean the market will then start looking at it and going, right, their terminal rate or the final rate of interest they're going to go up to, it's going to be above 5%. Don't forget, last week at the press conference, Kapow, as I call him, or J Powell, he said that their expectation is going to be higher, the interest rate's going to be higher to get on top of inflation. So that's going to be a big event. Potentially, if it does come in really hot, then we could see dollar strength, which we'll look at the market in a moment to see how we're getting on. Midterms. Again, a great question earlier on from John. What's my expectation of the US midterms? Well, I think expectation is that the Republicans to get a number of seats and actually to take over or have more numbers in the Senate. That's the expectation, because unfortunately, the market is really sort of obsessed at the moment with high fuel prices, which is going to damage Biden a lot. And that's despite the fact this is not his fault. He can't control the price of oil, but they're going to come down hard on Biden because of the high inflation. And that's going to damage him and damage the Democrats. So I think expectation is the Republicans to get more seats or more votes and to take over the Senate. If that's the case, any policies, anything else Biden may want to try and pass through law is going to be it's going to have major obstacles in its way. So that's going to have a major impact. But like I say, it's all about the midterms. It's all about, obviously, US CPI midterms is happening on Tuesday. That's when we should find out. But really for me, it's the US CPI. That for me is massive this week. That's going to be huge. And like I say, don't forget, last week, though the stocks and the stock market ended on a slight high on Friday due to the fact the NFP looked good, but really when you looked under the hood or under the bonnet, if you're English, it wasn't that good. Overall, last week they were down. US 30 down 1.5%, S&P was down 3.3%, and NASDAQ was down 5.7%. As well as that, major players like Amazon and Alphabet both lost 10% after the disappointing earnings last week on their share price as well. So really, it's all up to the US CPI now. If that comes in hotter, then the market will expect the Fed to go more than 5% on their interest rate. But anyway, let's have a quick look at the market, see where we stand at the moment. This is the euro. Like I say, it benefited last week on the NFP. Like I said on my Friday video, I dissected the NFP. Obviously, it looked good, 263. But when you looked at it closely, you could see that actually there is real clear signs that the employment or hiring of new jobs is beginning to slow down. So that's affected it. For now, the euro's capped with a potential resistance of 1.00089, so just above parity. Currently trading at the moment 0.9984. The sterling, again, also benefited. Still above the 114 handle, currently trading 14414. But like I say, realistically, I can see that potential area of interest at 1.15550. Dollar yen now under that trend line, still very sideways though. Very sideways, very range bound. Currently trading at 146.70. For me, a key area for my interest would be 148.57 as a potential area of interest. Gold Gold is now above that key area we've been watching for a long time, that key area of $1,667.86. Be interested to see if it has changed its role and is now a potential support. Currently trading at $1,678.92. So yeah, big week ahead of us for the US CPI and the midterms. The Facebook will be interesting, but we've got some other events happening as well. EU retail sales, like I say, US Consumer Price Index, which is massive. US initial claims. Will we start seeing an increase in unemployment benefit? UK GDP, UK manufacturing production, German CPI, and US Michelin consumer sentiment. So a very big day or very big week ahead of us indeed. Indeed. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like, like John did. If you think of a question later, of course, don't forget, you can always put it in the comment section, either on YouTube or Facebook. I will see it and I will reply to it next time I go live on air, which will again be later today at 3 p.m. UTC. So please come and join me for that as we discuss what's happening in the US session. Okay, if there is no questions, not a problem. Not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, find it interesting and useful, give me one of these. It's nice to know that you like what I do. Anyway, hang on, one question here before I go. Which event is the one you're looking at closely? It's going to be US CPI. Definitely the US CPI. And that will be the one I will be doing a watch along with. So please come and join me for that. Anyway, till next time. Don't forget, these little videos are for educational purposes only. And in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.